Hello guys, my name is Colin and this is Colin Talks Crypto. As you may know, almost 1/3 of my entire cryptocurrency portfolio is in Luna on the Terra blockchain. And I actually wanted to do a simulation and find out what kind of numbers could we be looking at realistically this bull run as Luna appreciates in value. Let's take a look. We're going to dive deep into this. We're going to look at the effects of burning the Luna token when we mint the stable token UST and a bunch of upgrades that are happening, and just do a deep dive into what I find a very, very fascinating and promising project. Thank you for joining me. Let's dive into this a little bit. Let's get into some news and let's just talk about this amazing, amazing ecosystem that is the Terra Luna blockchain. The vast stable token ecosystem on the Terra Luna blockchain is arguably its biggest asset. And it has actually more than just one stable token, if you didn't know this. UST is Terra's dollar-pegged stable token, but it even has a Mongolian stable token, a Korean stable token, and a multitude of others as well. So this was designed from the ground up, from day one, with stable tokens in mind, not as an add-on, but as an integrated fundamental aspect of how the Terra blockchain operates. And so the real quick and simple rule is that on the Terra blockchain, for every $1 of any stable token that you mint into existence, it requires $1 or the equivalent value of Luna to be burned. You cannot mint a stable token without burning the equivalent dollar value of that particular stable token. So you can see that as stable tokens become increasingly popular, that puts tremendous pressure, upward pressure on the Luna price, because the supply is going to drop and drop and drop. Now this next part I find really exciting, and I want to put this in perspective. Let's take a look at CoinGecko here, and let's look at the coin rankings. Here is place number 4, USDT, Tether, number 1 stable token in existence. Obviously, not the best stable token in existence. In fact, I would say probably the most dangerous stable token in existence. The simple TLDR on why it's the most dangerous is because it's the most centralized and it doesn't have the full assets to back up its reserves. So it's the most dangerous stable token, but it's the most long-standing and it has the most market cap. It has currently $69 billion of USD in market cap and 66 billion in daily 24 hours volume. So it's a beast. Despite its shortcomings, it really amazes me that people put this much money into something that is so unstable theoretically, and really at any moment could come crashing down. And I think that at some year in the future, could be in a week, could be in a year, could be in 10 years, it is going to collapse because it's not backed by anything. Maybe the US government will try to take it over. I'm not sure. Anyways, I digress. USDT, Tether, is the number 1 stable token, and it is number 4 on the entire coin market cap rankings page. I guess you'd say arguably rank number 5 if you add Hex in there, which for some reason a lot of these don't show. Now let's take a look at a couple of the other stable tokens. Next up we have Coinbase's USDC stable token with $29 billion of market cap and a meager $2.4 billion of daily transaction volume. So Coinbase's stable token is number 10. Pretty good to have 2 stable tokens in the top 10. That goes to show the demand that stable tokens have. Here you can see Luna is right behind that, place number 11th, and I think that Luna is going to enter the top 10 in the next couple of months, and it will stay there. That's my prediction. The next stable token is the DAI stable token, right around rank 30 here. You can see that it has $6.3 billion of total market cap and only $374 million of daily transaction volume. Let's keep on moving down. So where does that put UST, the Terra stable token? That puts UST right around rank 63 with $2.6 billion in total market cap and only $144 million in 24-hour transaction volume. So to make this simpler to look at, I put this on a spreadsheet. Keep in mind, while I go through this whole video, this rule at the top of the page here, this underlying rule for Terra. Every dollar of UST that comes into existence means $1 of Luna has to be burnt. Keep that etched into your mind because that's very important for the point I'm trying to make here. Let's just jump to DAI. Rank 30. Sorry guys, I just noticed there was some glare on the camera. I just fixed that. The window is shining directly on this laptop camera. Okay, so take a look at DAI, and basically if UST was to approach DAI's market cap, it would see an increase of $3.7 billion, bringing the Terra stable token from $2.6 billion to $6.3 billion. That's a $3.7 billion increase. Now, if UST wanted to take on Coinbase's stable token, that's a $26 billion increase from $2.6 billion up to $29.3 billion. That's an enormous increase. That's like, what is that, 12x or something? Now, if UST was to approximate Tether, USDT, the number 3 cryptocurrency on CoinMarketCap, stable token, the top stable token in existence, we would have to see a $67 billion increase in market cap for UST. So 2.6 plus 6.7 billion equals $69.7 billion. And that's how we come to that figure. So now that you see how really puny UST is in comparison to these other longer standing stable tokens, you can see how much multiple there is for growth. And this is something that is really, really apparent to me. And this is a big, big factor for why I personally invested a third of my entire cryptocurrency portfolio into Luna. Not UST, but Luna. Because of this rule at the top of the page here. Every dollar of UST that comes into existence requires $1 of Luna to be burned. And that can only reduce the number of tokens in circulation. And another factor of why UST, I'm so hopeful for it to grow to those heights, is because UST is the most advanced algorithmic decentralized stable token. And I say that because these three are centralized in greater and lesser degree. USDT and USDC are fully centralized. Like we said, for Tether, we don't even know if they have the reserves, and they likely do not have the reserves. For USDC, they may have the reserves. It's Coinbase. It's probably better than USDT. But they're both fully centralized, and historically, Coinbase has frozen stable tokens from USDC. So those two are out as far as any real serious decentralized algorithmic stable token in my mind. Then there's DAI, and that's sort of a mixed bag. It used to be fully decentralized, and then they started adding collateral of USDC to DAI. I think that at least half of DAI is now collateralized and backed by USDC. And as we just said, USDC is fully centralized. So it's impossible for DAI to be decentralized when it's based 50% or more in USDC as its collateral. So DAI is not fully decentralized. And I would argue that means it's not decentralized at all. Now we have UST, a totally different story. It is a fully decentralized, fully algorithmic stable token, which means it does not rely on centralized collateral. It fully relies on the interchange between burning and minting Luna tokens when you mint and burn the UST stable token in inverse correlation. And so that is another reason why I'm very, very bullish about UST. And UST has been holding its peg very well, except if you recall back in the May crash, UST did lose its peg for a short bit, but it was improved since that time, and it has proven its resiliency in more recent price drops, where it maintained 100% $1 price peg when every other stable token lost its peg. So I think that the improvements coming to UST have strengthened it, and the experiences we've seen with that May crash have strengthened UST, and my confidence in it for a future store of value is much higher. And it has always returned back to its $1 stable token, even if it does have momentary deviations, which they all do. All stable tokens from time to time do deviate from their pegs. Lastly, I just want to go through some bullish news for Terra, Luna, and UST. And I want to read you a bit from this article. While the demand for Terra USD grows, that's UST, more Luna tokens get burned, as we discussed, driving its price up. But to make it even more intense, in the upcoming weeks, the blockchain platform is due for a network upgrade dubbed Columbus 5. So on top of all that other bullishness I just talked about, there's a lot more coming just in the next couple of weeks. Probably by the end of October, this will all be in place. The blockchain platform of Terra incentivizes trading between Luna and Terra's stablecoins when it needs to reduce or increase the stablecoin supply, and is currently witnessing a growing awareness as the price of its native token surged more than 460% during the past 30 days. With $6.21 billion total value locked, Terra became the third among blockchains, following Ethereum and Binance Smart Chain. So of all smart contract blockchains, Terra currently has third place as far as total value locked. That is extremely impressive, considering the fact that it's ranked 11 currently. And I think that bodes very well for an increase in Terra's market cap standing. Major exchange listings like Coinbase boosted the Terra user base growth significantly as wrapped Luna and Terra USD became tradable on Coinbase. That was some recent news, so that's been helping. And basically, currently, Coinbase offers a wrapped version of Luna, but rumor has it that when Columbus 5, the upgrade, fully gets put in place, it will be very easy for Coinbase to add the native Luna tokens, which I think are very likely to happen. That will probably boost the price even more. Now, along with Columbus 5 are other upgrades and things happening with Wormhole and Anchor. The recent launch of Wormhole, a bridge, which is basically inter-blockchain communication with other blockchains, a bridge protocol that connects Solana and other blockchain networks, including Terra, that is set to facilitate tokenized assets, including non-fungible tokens, NFTs, moving seamlessly across chains, which likely started the price explosion. So we're not only going to have NFTs and low-fee transactions and a very rich and diverse stable token ecosystem on Terra, but all of this is going to be connected to other blockchains and interchangeable like Solana. As of recently, Ethereum can be used as collateral on the Anchor protocol, a lending and saving platform in Terra's ecosystem. So Anchor is what mints the UST into existence and burns the Luna. Now, up until recently, you could only use Luna as collateral when minting UST. But now you can actually collateralize your Ethereum tokens and take out a loan in UST. Now, why would anyone do this? Because the interest rate being paid for anyone who takes a UST loan is 20%. So let's do an example here. Let's say you have $100,000 of Ethereum. You convert it to the locked form, BETH, on the Terra blockchain. You send that to Anchor. On the Anchor protocol, you take out a $25,000 UST loan with that $100,000 of Ethereum that you have there as collateral. Well, on that $25,000, you're going to get a 20% interest. They're going to pay you 20% interest for having that loan. That's right, you get paid to take loans on the Anchor protocol on the Terra blockchain. So that incentivizes a rush of Ethereum and Luna tokens over to Anchor to be locked up and to have loans taken on it. You don't even have to do anything with the money that you took a loan on, and with a very safe loan to value of 25%. Again, if we took $25,000 loan off $100,000 collateral, that's 25% loan to value, which is considered very safe. There's a very low risk of that ever getting liquidated, but you're getting a 20% interest rate paid on top of it, and that is what is so bullish. You can do a higher risk if you want. You can do a 50% LTV. And then in that example, you'd be getting a 20% interest paid to you on $50,000. And so you can do the math and see why so many people are flocking and taking loans on the Anchor protocol on the Terra Luna blockchain, because nowhere else are you going to see returns like you're seeing there. The news of a new gateway for Ethereum users that can interact with Anchor boosted the protocol's total value locked to $2.7 billion from $1.7 billion in just 4 days, reflecting the demand for UST, which can be borrowed against BETH, a wrapped version of the staked ETH staking derivative for Ethereum 2.0. So guys, that's what I have for you today. That's why I'm so bullish about this. We have Columbus 5 coming up. We have the Anchor protocol paying 20% interest on loans that you take. We've got the Wormhole coming up, connecting to Solana and Ethereum and other blockchains. And we've got a stable token ecosystem that is so rich and so ripe and so under-recognized with so much potential, because it is the best decentralized, truly algorithmic stable token in existence. This is why I am so incredibly bullish on the Terra Luna blockchain, and why I specifically aim to hold a large percentage of Luna tokens in my portfolio. Currently, it's 34% at the time of this recording. I saw it as high as 40% recently because the value organically grew so much overnight. And like I said, I've begun to sell some of my other more stale assets and put it into Luna tokens because I do consider there is a lot of gain to be coming when you consider that you can take a $2.6 billion stable token like UST and approach something like Tether. I mean, just doing the math on that, adding $66 billion to Luna's market cap, let alone UST's, is just something that cannot be ignored. This is why I've actually bought even more Luna recently. I actually took the plunge and I took this underperforming asset in my portfolio, which is Bitcoin Cash, and I sold all the Bitcoin Cash above and beyond the number of tokens that matches my Bitcoin holdings. Because originally when I was holding Bitcoin Cash, it was both as a hedge against Bitcoin's failure to scale, so that if BCH flipped Bitcoin, I would have just as much dollar value. It was like a precaution, like an insurance plan. Well, that never happened. But then I ended up buying even more Bitcoin Cash to the point where I had like 3 or 4 times as much Bitcoin Cash as I had Bitcoin. And that's because, and I still do, truly believe in Bitcoin Cash's vision. It's a peer-to-peer cash, money for the world. And I still love it. And I don't want anyone to take this away as any kind of a hater comment on Bitcoin Cash because I think what Bitcoin Cash is doing is needed and it's awesome. But at the same time, just like all you guys, I'm an investor and I see many competitors that are doing things like Bitcoin Cash is doing, maybe not exactly the same, or maybe better, like maybe a rich stable token ecosystem like we see on Luna, or maybe advanced smart contracting like we see on Ethereum and other smart contract blockchains. And so I do feel it's a little bit living in the past to have such a large exposure to Bitcoin Cash when really its features are not up to pace with the rest of the cryptocurrency ecosystem in many regards. It is the king of low fees, but there are other low fee blockchains out there as well. And so I just thought it's time to sell the excess. I'm still maintaining a parity, the same number of coins, maybe slightly more as I hold with Bitcoin, just as that original insurance policy. But I'm actually selling all the rest. I've already sold all the rest for Luna. And so I've increased my stash of Luna by a couple percent. And so sometimes the right decision is to pivot. And sometimes you do have to reevaluate your positions, no matter how painful it can be. And for myself, I have had to do that. I've had to do that with EOS, where now it's down to 3% of my portfolio. A lot of that due to just natural price degradation. And I'm still holding on to that sliver hair of hope that it moonshots someday, but I'm not counting on it. And for Bitcoin Cash, the same thing. I think that Bitcoin Cash and EOS were the two kind of laggards in my portfolio. And, you know, after years and years of poor performance and just not making up for it, despite a bull run that's halfway through right now, I realized that it is time to start letting some coins go. And so I did sell the excess Bitcoin Cash above and beyond my insurance policy concept. The next part of the video, I'm going to show you a site called terra.smartstake.io. It basically shows the burn statistics for the Luna token. It also shows the stable tokens. And you can take a look at this on your own. You can see right here on the right side, it says supply reduction, and it shows you how much of the coin supply is being reduced every single day. And you can see the supply change right here. And actually, it's not just when UST gets minted that Luna gets burned. It's when any of the stable tokens on the Terra blockchain get minted that Luna gets burned. And so here's a couple of them right down here. You can see here's the UST total supply history increasing. You can see that there's a couple others here. We've got KRT, which is the Korean won, I believe it is called. We've got the MNT, which is a funny one. This is a Mongolian stable token. I guess I say it's funny because it just seems like a country I would never have a stable token for, and yet you do get them when you stake your tokens. And so this is a token that I use to pay the fees when I do transactions on the Luna blockchain. I'm actually paying my transaction fees in this Mongolian MNT token. And just for fun, the MNT is called Tugrug, and that's the currency code, MNT. Also goes by Togrog or Tugrik. It's the official currency of Mongolia, just in case you were wondering what MNT is. So apparently MNT is kind of hot as far as the Luna blockchain goes over in Mongolia. They're using that stable token. And so if you go to the top of the page here, you can see a daily listing of the supply change in this red bar graph. You can see the green means that there's been an increase in supply, and a red line means there's been a decrease. So pretty much always there's a decrease in the circulating supply of Luna, and that's because of this chart down here with the increase in UST. And I expect that trend to continue because, like we said on the spreadsheet, it only takes a quick glance at the difference between these market caps to see how much behind UST is in terms of market cap versus DAI, USDC, USDT, and other stable tokens. There is so much multiplier and room for growth for UST that it really just bodes for a continuation of this chart going up, up, and up more. So guys, I hope you found this useful. And with that being said, guys, I hope you have a fantastic day. Take care.